What's up, everyone? It's Karthik with MoneyVest. I am back in Boston. Took the flight in the morning. However, my flight got delayed by 2 hours, but I finally got here. It is a little bit past 7:30 p.m. Here in Eastern Time Zone, and fantastic trip over the weekend. I was supposed to actually fly back on Monday, but I was really just enjoying my time over in Florida, so I decided to stay one more day. Shout out to David. He's part of our community. He's been a part of our community for over 4 years. His official name on Discord is Green Mike. But no, thank you so much. Shout out to him for his hospitality and, of course, organizing everything while I was there in Tampa, Florida. And the overall meetup, as I discussed in my yesterday's update, was also incredible. 20 members came through, and we distributed all the t-shirts, and we had an amazing time. And in 2025, we're actually planning on doing this at a much larger scale. And doing it and turning it into a little bit more of a conference style meetup where we do like a 1-day event. It's going to be an entire day event where there's going to be education, there's going to be networking, and there's going to be fun. So we're trying to organize something a little bit at a larger scale for everyone. So hopefully it's gonna be fun, and I hope a lot of you guys can make it. I know I was sharing a lot of pictures and videos over in our Discord. And then, obviously a lot of people were having that FOMO, a fear of missing out of this amazing weekend that we had. But I really want to do this in 2025 with all of you. I really want to meet every single person in our community, in our Discord and YouTube, because it is really fun for me as well, having to learn about all of you guys, because I know, you guys watch me all the time, every day, you and your families. You guys see me, but I never get to see you guys. And that's why we do this, is so I can learn about you and your lives and your investing and trading journey as well, and how I can help, as much as I can. So that's what it's all about. Again, thank you so much for being a part of our community. So coming over to the market update, the Dow Jones hitting a record high at just shy of 45,000, the S&P 500 closing at over 6,000, and the Nasdaq here over 19.1, with the MoneyVest index trading at just shy of 4. So we are very, very close to being in a greedy market environment, which is exactly why we need to be very, very cautious. Now, before we move forward, I also want to wish you and your family a very, very happy holiday. Thanksgiving is right around the corner, and for that, of course, we've got a brand new sale, which is the Black Friday sale. It does expire on Saturday, so we've got a few more days for this. 70% off on all courses, individual courses, as well as bundles. So if you've ever wanted to enroll and get started with your financial education and learning about fundamental analysis, technical analysis, options trading, and psychology of investing, all individual courses as well as bundles, everything is going to be 70% off. Coupon code is going to be Black Friday. All caps, Black Friday, and you will have a 70% discount. This is one of our biggest sales of the year. Link's going to be down below, and does expire on Saturday. And TradingView is also having their Black Friday sale. So if you've ever wanted to start TradingView, which is this platform that I use every day, I'm showing charts on this platform. I've been using them for well over 5 years. Honestly speaking, this is the best technical charting platform I've ever used, and this is literally what I use all the time. They're also having a 70% discount, and I'm actually going to be paying annually with them to take advantage of this sale. So link for that is also going to be down there. You will get a discount, of course, 70% off plus 1 free month. So check out both the links for both the MoneyVest courses as well as the technical analysis TradingView charting platform. Both of them are 70% off for this Black Friday sale, and I'd love to have you take advantage of that. So overall, we had a very, very strong market. Now tomorrow we've got the inflation numbers coming out. So Wednesday, November 27th, a day before Thanksgiving, we've got mortgage repricing. So 30-year, 50-year fixed is going to be 15-year and 30-year fixed is going to get repriced. We've also got MBA mortgage refinance index, mortgage applications. So it's going to be a very, very housing heavy data week. Building permits came out earlier. We dropped a little bit, 0.4%. But tomorrow we've also got inflation numbers. And this is actually the Fed's preferred measure of inflation. So if you come down a little bit, you'll notice we've got the PCE, that's the personal consumption expenditure. 2.3% is the estimate versus 2.1%, which was the previous number. So we're going to be expecting to see a little bit of a tick up in overall headline inflation. And then the core PCE, that's really what the Federal Reserve focuses on, is going to be down here. So core PCE, that's the price index at 2.8%. That's on a year-over-year basis. And that also is expected to tick up a little bit from 2.7, and core PCE month over month expected at 0.3% versus the previous number of 0.3%. So both headline and core is expected to tick up by 10 to 20 basis points respectively on a year-over-year basis. And this is really what's going to be affecting overall interest rate expectations from the Federal Reserve. So if you come over to the summary of economic projections, so let's just take a quick look over here on CME FedWatch tool, you'll notice that the probability for us to see a rate cut is still pretty high. We are well over 60%. The next meeting is going to be in 21 days, and that's going to be accompanied with the summary of economic projections, which is going to give us a little bit more insight into the next 3 years plus longer term goals when it comes to four things: interest rates, inflation expectations, economic growth, and unemployment. So all those four things are very, very important for monetary policy and of course for the Federal Reserve. But if you come over to probabilities here, this is going to be the last meeting of 2024, and markets right now are pricing in for almost a 60% probability that we're going to see a rate cut. Another 25 basis points worth of rate cuts. That's going to put us down 100 basis points that the Federal Reserve is cutting in 2024. However, the 42% probability that has been creeping up slowly and steadily. It's been going up ever since the 10-year treasuries were going higher, and there was expectations that inflation is going to potentially reaccelerate after Trump got elected as the incoming president in 2025. With the tariffs, of course, the deficit, there's been a lot of changes in the market's expectations of whether we're going to see interest rate cut or not. But tomorrow's inflation numbers are certainly going to be moving this probabilities as well. So keep a close eye on that. And definitely that's going to be coming out at 8:30 a.m. Eastern, a very, very important economic data that's going to be coming out for the market. Of course, initial jobless claims are coming out, I think, a day earlier because Thursday the markets are going to be closed in observance of Thanksgiving. Actually, it says early market close, observance of Thanksgiving, and I think Friday also we might see the market close in early. I'll have to double check on that because usually we have seen the markets close early in observance of Thanksgiving. So that's going to be Thursday and Friday, and of course we'll price those options accordingly because I do have a couple contracts I think expiring this Friday. So that's going to be on the radar for tomorrow. Be ready. Very, very important inflation numbers, and we certainly will have changes in the market's expectation for interest rate cuts versus maintaining that steady rate. Now, Deutsche Bank is also forecasting the S&P 500 to get up to 7,000 by 2025 end, and Barclays is also raising its target to 6,600. And there's definitely a lot of optimism in this market right now. You can see the performance year to date. Financials are leading the way, up over 36% on the back of 10-year treasuries pushing back up. And you can see the last 3 months, it is up over 14.5%. But what more specifically is the last 1 month of performance, last 1 month. And that is really been the key here for financials. Take a look. 1 month performance, 8%. 8% and consumer discretionary, but that's a little bit of an outlier because that's thanks to Tesla. And so that's why consumer discretionaries have done really well. But financials are clearly leading the way as 10-year treasuries have really pushed up in the last couple months here, especially this month after the election, right? So after the election, we've seen the 10-year treasuries really push higher. And of course, as the odds of Trump winning the election went up, the 10-year treasury went up, and that obviously helped the net interest margin, the NIM, for a lot of these financial stocks, and they've obviously pushed up as well. So 8% move to the upside. Now, year to date, financials are actually leading this market higher, which is very interesting to see. Along with staples, utilities, we got industrial, we got services. Technology is still up there, but 23%, which is still obviously a lot less than utilities, over 31%. So that differential is back over at 8%. And it's really important to track the technology versus utility differential. And the reason is because it is a very good proxy for us to understand risk reward. It is a very good proxy. It's a very good indicator for us to understand where liquidity is going to. Is it more on riskier assets or is it more on safer assets? Because technology in general is considered a little bit more growth, and it's considered slightly more risk oriented as opposed to utilities. Utilities are safe, right? Utilities are usually a risk averse play, and they are a recession proof sector where markets kind of flood into if they are expecting a recession on the horizon, or if they are expecting some type of a hotter market where caution is what they're looking for. So this differential has fluctuated quite a bit, and we're back up to 7-8%. Just goes to show that there has been a little bit more liquidity flooding back into utilities and coming out of technology. As a result, the performance has not been as great. However, that being said, almost all 11 sectors, pretty much everything is up year to date. Healthcare up the least, up over 7.5%. And we got the bond ETF. TLT is the only ETF that is down almost 6%. Bonds continue to underperform this year. Now, if you come over to the Magnificent Seven, and of course the individual indices and sectors and ETFs as well, the Dow Jones is up a nice 19.4%, and the S&P 500 up 27, almost 27%, and the Nasdaq is up almost 29%. So this is another really phenomenal year for everyone, and I'm sure you're absolutely crushing it. And a lot of individual stocks up over 60, 70, 40, 50, 80%, and this has just been an amazing bull market for 2024 here. Of course, we'll find out how long is this going to last, and are we going to see any type of a pullback or a correction. It's not a question of when we're going to see it. No, it's not a question of if we're going to see it. It's a question of when we're going to see it, okay? So I want to make that very clear that it's not a question of if we're going to see a pullback or a correction. It's really a question of when we're going to see it, because it's going to happen. We just need to be ready for it. And I was actually listening to Howard Marks earlier today in the plane. Actually, I downloaded a couple videos of him. And it always reminds me how smart and intelligent his philosophy of investing is, because nobody can make predictions, right? And he always talks about how useless it is to make economic forecast. And the best thing you can do is try to understand the present moment, what's happening now, right? And try to take what he calls a market temperature. A market temperature is essentially telling us how are the markets positioned today. How is the risk reward today? Are people being greedy or fearful today? That is what it comes down to, because we are not trying to predict where the markets will be. We're just trying to understand where the markets are. And that helps guide our decision making. And that has really changed, honestly speaking, that's really changed the way I have invested in the last year and a half, and how I look at stocks and markets now, is because it really is not about making predictions. That's why we've built the MoneyVest Index, is to kind of give you that market temperature and how good or bad in terms of risk reward, we are currently. And we're almost at 4, right? So you can see that this right here is a nice little grid. Anything between 4 and 4.5, we're coming up to greed. So this market is now starting to get into that greedy area, where you can also see the line chart here. We're slowly and steadily ticking up. And the last few times we were in greed was back in October 24. Prior to that, we were September 24. Prior to that, we were in July 24. So we've been there a few times in 2024. And every few times we've seen that pullback. We've seen that dip. We've seen that correction. So it's not, it's not unusual to see the markets roll over a little bit of profit taking, pullback, correction, whatever it is, a dip, for us to get those buying opportunities. And the moment it gets up to 4.5, or above 4.55, I'm going to be super cautious. That is what I am personally doing. So in terms of the market cap change, we did have, of course, Amazon, Microsoft, Apple, all these big tech, Magnificent Seven stocks gain a lot of liquidity here. Some of the big losers on the day, we did have ExxonMobil. Amgen dropped actually over 4.7%. It was much lower, but it looks like it got bought up fairly quickly. Then we had General Motors, we had Advanced Micro Devices, Uber Technologies, everything rolling over a little bit here. And market snapshot, you can already see that everything's either at an all-time high or in a dip, which is well within 5% of all-time highs. And individual stock-wise, we are also in a dip or a slight pullback. Very few stocks are in a little bit of a correction, but overall, markets are doing really well. They're still very strong, and we're still near all-time highs here. Microsoft with a very nice 2.2% gain, coming up to that resistance here. That's going to be that target to keep in mind for Microsoft, all the way up to $430, $440. Now, coming over to volatility, it continues to drop here, 3.5%, low 14s, and we are once again in a very low percentile. And that's exactly the correlation here. VIX continues to come down, MoneyVest Index continues to go up, so those are moving in the opposite direction. That's how we've programmed these two indicators to work, and that's why it is now time for me to take a little bit of a step back. It is getting very hot out there, and I want to be very cautious, start buffing up my cash positions, and get ready to deploy them if and when we get any type of a pullback and a correction or any buying opportunities. And Christmas rally continues to be here. Santa rally is here, moving in strong. The 10-year treasuries stabilized a little bit at over 4.3%. Crude oil was down slightly, 26 basis points, back under $69 a barrel at the moment, and then coming back over to individual stocks. So starting with S&P 500 here, hitting a brand new all-time high of 6,025. There we go. So brand new all-time high on S&P here. Nice little breakout coming in, back up to over 6,000, and support level is going to stay put at 58.67. So again, we're at all-time highs here, so just got to be a little bit more careful at the moment. Nasdaq still yet to hit an all-time high. 19.3 is going to be that resistance and that target to watch. Support level at 18.6 for the Nasdaq, and of course the Dow Jones here hitting a fresh brand new all-time high at 44,900, just shy of 45,000 for the Dow. Absolutely incredible. Coming over to Apple stock here, and Apple on the day also gaining very nicely, up almost 1%, coming up to all-time highs. We've got a huge resistance and an area of supply and a target to watch for Apple here. We've gotten rejected at this level quite a few times, so we'll see whether it breaks out above this or if it finds some type of a resistance at these levels, and support level is going to stay put at 214. Coming over to Amazon here also with a very, very strong gain, and we talked about this, right? It's coming down to a very strong area of demand, support, buyers stepping in, resistance at 216, 217 for Amazon. Coming over to Nvidia, Nvidia continues to be a little bit more weak. Still green, however, not really finding a lot of buyers as opposed to some of its other counterparts. Support level is going to stay put at 133, 134. Resistance all the way up to 149 and 150 for Nvidia right now. Advanced Micro Devices, we discussed, yesterday. We are seeing some L3 banker oscillator to suggest that there's buyers stepping in, some of the bigger buyers stepping in. So we might be in an area of accumulation right now. We'll find out very soon, of course, but resistance is going to be at 150. Got a very strong area of demand and support here for AMD in the 130s right now. So keep a close eye at where AMD trades at this moment. We're finding a lot of support here, and there is potential for AMD, but however, short term, I do feel it's going to struggle a little bit. But long term, I mean, it really comes down to how they're planning to deploy some of their newer products and how well they do in the data center side, and of course the gaming. But support level is going to stay up at 130s and resistance up to 150 right now. I may think about selling some puts on AMD as soon as my cash clears on SOXL. But of course, it's going to be a much bigger play because AMD puts are going to cost somewhere between $12,000 and $13,000 depending on the strikes that I'm choosing. Coming over to Tesla here, Tesla is finding a hard time breaking above 350s here, and you'll notice it's just been hovering around in this range. I mean, it's just really been trading sideways. A couple times it's gotten up to 361, but sellers have really snapped us down, back down to $340. So I may put down like a very, very small sort of resistance here where Tesla is kind of struggling to break above 360. So that is something that I'll keep in mind. Support level is going to stay put right about here. So it's going to help us in our options trading as well. So the higher it goes, the better the opportunity for us to sell calls. And of course, the lower it gets, the better the opportunity to sell puts. Now coming over to PayPal. And PayPal here on the day was slightly down, about almost 1%. We talked about this resistance, very strong area of supply, getting rejected right there, coming off. Support level is going to stay put at $80, $81 per share for PayPal. And then coming over to Visa, and Visa here also hit a new all-time high yesterday, getting a little bit of a pullback. Support level is going to stay put at $306. We got a little bit of a gap to fill here, down to $291. That's going to be that next support level to also keep in mind for Visa. Coming over to Meta platforms, and Microsoft we already went over, but Meta, Netflix, and Google here. Meta also seeing some nice inflows, up over 1.4. Resistance is going to stay put at $600. Support level at $540. We're seeing a lot of consolidation for Meta here. Going over to Netflix, and Netflix also pulled back yesterday after the overbought conditions and just a massive rally on Netflix here. So it definitely is, in my opinion, a very, very overbought stock. Support level is going to stay put down at 772. And then coming over to Google also seeing some buyers finally stepping in at that area of support and demand. As we discussed, resistance is going to stay put roughly at 175. Coming over to Palantir. Palantir also continues to be near overbought levels, up another 1.6%, trading at just shy of $66 per share here, and 52-week highs trading at just under 68. I just be very careful with this because of the negative divergence and the fact that it's incredibly overbought right now. It's been rallying like crazy. There's been a lot of sentiment, a lot of momentum here, but the valuation is literally insane. I mean, if you come over to some of the statistics here, we're looking at a 60 times sales multiple for Palantir, with over 327 times earnings multiple. So yeah, the valuation is quite crazy. So are the technicals. So just be very, very careful with this stock right now. And last but not least, we got Enphase and Costco. And Enphase, of course, has been catching a lot of bids more recently. starting to round out after the oversold conditions, and support level is going to stay up roughly at $59-60, and all the way up to this near-term target at $74 for end phase. So those are going to be some levels to keep in mind. And then finally, we come over to Costco. Costco here, consolidating sideways a little bit, coming back up to its near overbought levels. Support level is going to stay put at 961. Looks like it got bought up here from those levels today, and all the way down to as low as 920. And of course, we got an all-time high sitting at 975, 976. So hope you all enjoyed this video and a complete update on the market. Make sure that you drop a like. Don't forget to join our Discord and Patreon if you want to get access to all the trade alerts, weekly options updates, as well as our community and everything that we have to offer. And also don't forget, we've got huge sale, 70% off for Thanksgiving and Black Friday for the MoneyVest courses. That's going to be coupon code Black Friday, and the link to TradingView is also going to be down below if you want to get access to the TradingView platform and get started with them. As always, happy investing. I'll see you all in the next video.